Hello, everybody. So I've decided to take a risk today and cover PayPal for the channel. So the name of this video is Should I Buy PayPal? And I'm covering it because I've seen it trend on Twitter for just about 5 days. Everybody's saying it's the best opportunity ever, is what I've seen on multiple videos on YouTube and on Twitter. And I actually haven't looked at any of these videos. Actually, I'm just giving you my video from scratch, my assessment from scratch of PayPal without the input of any other one of these videos. And keep in mind, it's not a stock I follow, so maybe I get a few things wrong. But nonetheless, should I buy this stock? Should I buy PayPal? So let me go through my little analysis and then I'll tell you my conclusion. So there's a few good things. Two main good things that I've seen about PayPal is one of them, they're getting a new CEO finally. It had been months since they hadn't had a CEO. So again, leadership. Does leadership matter? Or should you have a company that can only be run by a fool because eventually a fool will run that company, right? Kind of a whole debate. Peter Lynch was really big into that. I happen to believe that leadership is way less important than the business. But some people believe otherwise. So if you really believe in leadership, then you might be very happy that there's a new CEO. And then the buyback. And of course, whenever you start talking about buyback, you start getting into this debate. What should a company do with extra cash? Should they invest in marketing? Should they invest in innovation? Or should they do financial engineering, which is what buybacks are? They are financial engineering. When you buy back shares, you increase your earnings per share because you reduce the number of shares, right? In earnings per share, EPS. You buy back shares, you increase your earnings, and the market's happy about buybacks. But of course, that's a value method way of doing things. It's what value stocks do. The question that I have, though, is it a growth stock? Is PayPal a growth stock? Is the product of PayPal getting adopted? Are we living in a world where PayPal is almost no transactions right now online, right? And is it going to be 10x bigger 10 years from now? And the answer to that is clearly no. PayPal used to be a growth stock back in 2005, 2004. That was a growth stock then. But today, no. Today, I don't think PayPal is a growth stock. Today, PayPal is an established company. It's a behemoth. It's a big company. It's right behind Visa, MasterCard, and I guess you put American Express, although American Express is a slightly different business. PayPal is an established company. That's why when I put it through my growth price screener, my usual spreadsheet where I ask the question, how much am I paying for each percentage point of forward growth? What's the cost that I'm paying? Well, it comes up as an expensive stock. PayPal comes up as an expensive stock based on this because even though the stock is extremely cheap for a value investor, there's almost no growth. So when I divide each percentage point of growth, when I divide the price per gross profit over revenue growth, I get to a price, a ratio that I'm paying, a price that I'm paying of 0.67 for each percentage point of future growth, which is actually expensive. Through the way I look at stocks, the future growth of PayPal, you're paying up more for that future growth than you are, say, paying the future growth of Tesla, and you're paying about the same price as Palantir as far as how I value stock as a growth investor. So nothing to be excited about for me. That's expensive growth for me. But moving on, I can think like a value investor, and I can tell you, what's to like. What is to like about PayPal? Well, not the growth, like I said. I'm not excited about the growth. The growth to me should be at least 30%. And when growth is 8.5%, they are growing slower than the new money supply issuance rate, which I estimate to be at 15%. So this is a stock that is drowning, that is sinking in a sea of new money being issued. They're not keeping up with even their fair share of new money being issued with a growth rate of 8.5%. But this company, like I said, I can think like a value investor. This company is in the return of capital stage. That's what they're doing. They're a mature company. P ratios can be used to assess a company like PayPal. Hypergrowth is behind. So let's analyze PayPal like a value stock because it is a value stock. Enterprise value is $66.55 billion, roughly the same as market cap. They have just $1 billion more in debt than cash, but healthy company. The debt is not concerning. the enterprise value over sales is actually pretty cheap at a 2.33. So that is good going for them, even though I still have stocks in my spreadsheets that are growing at over 50% that have these ratios close to a 1. So let's keep that in mind. It is cheap for a stock that large and that famous, but it is nowhere near the cheapest in the market. And if you look at the guidance that they gave us for free cash flow is $5 billion, which means that the stock is trading at 13.3 times free cash flow. The free cash flow yield is 7.5%. And again, that's a free cash flow yield. You have to trust that they'll reinvest it well into the business. You have to trust that they'll actually do buybacks and not say, give it to the employees in the form of bonuses and things like that. And by the way, the 7.5% free cash flow yield, this is me being kind. I am ignoring the BNPL loan issues and all of that deal with the buy now, pay later. And if you look at the free cash flow, it's been a little fuzzy over the past few quarters. But this is not a stock that I follow, so I can't speak to that much because that's not a stock that I follow. All I can say is that yes, it's cheap, definitely not the cheapest stock out there. And if you look for growth, those growth numbers personally scare me. And so moving on, they're buying back stock. So they're buying $5 billion of stock, which means that would bump the yield, assuming you reduce the number of shares, that would bump the yield to an 8.1% after the buyback. So that's not that much. You really need to do a lot of buybacks to increase your earnings yield for a stock. You need to do a lot of buyback. And the sales growth is still only 8.5%, which is less than monetary inflation. So again, to me, nothing to be excited. And I want to say, there are stocks that you can get out there in the same field with higher free cash flow, with slightly higher free cash flow multiples, right? Multiples slightly higher, but that are experiencing insane growth, tremendous top line growth. And so the example of that is Dlocal. Dlocal is, in my universe, a stock that I follow. It's the closest peer that I have to PayPal in my universe. In my view, the closest peer is Dlocal. But Dlocal, if you look at the company, and Dlocal is a company that specializes in payments, in online payments, just like PayPal, but they specialize in online payments in emerging markets. They're in 30 different countries that are not Western countries like the US or Europe. So that's what Dlocal does. But they're a newer company. They're growing at 53% next 12-month estimates. The analysts estimate that the sales will grow by 50%. So tremendous growth. PayPal is only 8%. The enterprise value is a much smaller company at $5 billion. Free cash flow is $216 million. So you're getting a 23x on an EV to a free cash flow on a stock like Dlocal. So you're paying up a little bit, but you're getting 53% top line growth. PayPal, you're paying 13, but you're getting almost no top line growth, And if you look at the direction of the free cash flow, when I look at a company like Dlocal, of course, free cash flow is going to go grow faster than sales because you have leverage in the income statement and in the balance sheet. And because the stock has leverage, if you look at the free cash flow of Dlocal, it's been doubling every year. So if Dlocal doubles cash flow again, which I believe they will, you're paying only 11.5 times next year's free cash flow. So that's actually cheaper if you look at it than if you do PayPal. If you do the same analysis and if you look at PayPal's cash flow, ignore the issue that they've had with the buy now pay later business, ignore that and say free cash flow for PayPal goes up by 10%. The next year, enterprise value of free cash flow for PayPal is only at 12. And keep in mind, this is a company that's going to keep growing at very, very high rates. Maybe not 50%, but you don't go from 50% to 8% overnight. It takes a decade for your growth to abate this fast. So to me, PayPal is a company that's just not growing fast enough. But I mean, in and out of itself, it depends the type of investor you are. Because I am a growth investor, I invest in hyper-growth stocks. Some people are not like that. Some people like all sorts of opportunities and look at the market through different lenses and styles of investing and may be interested in PayPal because of that. And so if you are one of these type of investors, I have a few questions for you. So one of the big rationales as to why someone would own a big stock like PayPal is that, they're less volatile. Big market cap stocks like PayPal is in the S&P 500. PayPal is in the Nasdaq, and thus it is less volatile. And of course, you look at this chart and you realize that nothing could be further from the truth. And this is true. I mean, today mega cap stocks can be as volatile as a $5 billion stock, and I think this is saying a lot. If you look at whether it's PayPal, whether it's Tesla, whether it's Facebook, these stocks have gone through similar roller coasters to a $5 billion stock. I'm sorry, I analyze a lot of stocks that are considered medium caps. Medium caps have the same volatility as mega caps, so why not judge them almost on equal footings? At least that's the way I look at it. I actually prefer smaller companies because smaller companies have much larger upside potential. But nonetheless, one would argue that if you invest in a bigger market cap stock, it's what you would call a capital preservation type of stock, right? It's a heavier, it's a blue chip. Well, a blue chip can have insane volatility. And imagine if you bought PayPal near the $300 mark, really doesn't help out that you bought a blue chip. But that's volatility is short term. Over the long term, the market is a weighing machine. That is what matters the most. And therefore, this is where I bring up the idea of moats versus speed of innovation. You can't remove to PayPal that they have a moat. Yes, PayPal does indeed have a moat. They are everywhere. In most countries of the world, especially in the West, you go online, you can use PayPal to pay. That's their moat. They're everywhere. It's kind of similar to the Visa or MasterCard moat. Great moat. But then PayPal, with its moat, is obviously trying to charge a take rate. And the take rate of PayPal is fairly high for merchants. Merchants are actually pretty upset about PayPal's take rate, which is notoriously higher than a lot of other systems. PayPal is also known among merchants for clawbacks and for refunding the customer often without a due, well, I don't want to say without a due process, but there's a lot of issues with merchants and PayPal. It's a payment processor that is more on the rent-seeking side. You can see that this is a payment processor who is trying to make money, as opposed to, say, Cash App, who is entirely in growth mode and trying to gain new customers. So that's the moat. But how strong is this moat? And do you believe this moat can be attacked by innovation? And to me, this is the big deal. Can the moat of a PayPal be attacked by innovation? Well, I think it can. And I think it is being attacked by innovations because many companies everywhere are, going after the take rate business, the payment processing business. That's a great business. It's an amazing business. So Google Pay, Apple Pay, Amazon Pay, Samsung Pay are all getting into that business. And you know how easy it is to use Google Pay. If you've ever used it, it's very easy. It's eating into PayPal's business. Then you have a traditional payment processor, Visa, MasterCard, American Express. They're still fighting. Then you have the emergent payment processor, especially Affirm. Remember, Affirm built its own payment funnel outside of the Visa or the MasterCard, which is absolutely amazing, and it's taking some business from them. Soon, we've heard Elon Musk multiple times. I said, I am going to get into the payment system. X is going to be a fintech. X is going to get into that. Well, what does that mean from PayPal? Just from, say, a short-term reaction of the market. Imagine the short-term reaction of the market. Whenever one of the Musk companies enters a business, the market tends to have a reaction just like whenever Amazon enters the business. The market gets scared. So that's something that's coming up that could be a danger. You also have some related payment companies that are taking market share, like Global E, Adyen, Dlocal, as I just talked about, in emerging markets. These are taking market share. There's competition, right? That moat is under attack. Which is not a problem if a company innovates. But I'll talk about innovation in the next slide. If a company innovates, it's not a problem. They're always a step ahead from innovation. But that's not it. You have CBDC lights that are coming, like FedNow in the US or Pix in Brazil, greatly reducing costs. So that's going to take away some money from PayPal, from the remittance business. And then you also have the crypto payments that are coming. And we don't talk too much about the crypto payments right now. The regular fiat fiat US dollar payment system and the crypto payment system are pretty siloed right now. But this may be changing. You have a lot of companies like BitPay that are coming, but more importantly, I think it's important to look at what's happening in the US with the presidential election and many bills being introduced. Some bills talking about as many as $1,000 per year that someone could spend in crypto tax-free without having to pay taxes on capital gains. So this is going to lead a lot of people, in my view, to pay with crypto. A lot of people are going to be very compelled by these new bills being introduced for consumer protections who want to pay in cryptocurrency and not necessarily pay in dollars. So this is also a threat, although crypto is a longer threat, I believe, to the payments business than still fintechs against each other, competing against each other. That's the main threat. So this is a space with a lot of innovation, and therefore hiding behind the moat and increasing prices behind the moat, it may not be, in my view, the best strategy. And there are many companies out here whose growth I could explain by the lack of growth from PayPal, because e-commerce is still growing much faster than 8% a year, which is the rate of growth of PayPal. This is a company, in my view, whose growth has stalled. But nonetheless, this is not a problem if PayPal innovates. If PayPal innovates and keeps investing in innovation, which they're not doing, they're maximizing cash flow. If you look at their income statements quarter over quarter, OPEX is down, their CapEx is down, they're prioritizing cash flow, but they could innovate, right? They could innovate, and if they innovate, I believe they can regain their growth and gain that growth again. To me, it's so essential. However, the history of PayPal's innovation since Elon Musk and Peter Thiel has been gone. They were very innovative in the early days, but since the PayPal mafia left PayPal, I've seen them lose a lot. Like in the U.S., I've been in the U.S. since 2010 exactly. I have seen the rise of Venmo and the defeat of Venmo by Cash App. I've seen people going from Venmo, we do Venmo everything, to now it's Cash App everything, and they just use Cash App. And so Venmo, yes, there may be still a lot of accounts that are activated, but to me, in the US, it is very clear that Cash App is the winner and not Venmo. So that's an innovation that they've had that they haven't kept up with. Buy now, pay later, right? So PayPal has a buy now, pay later business, but their buy now, pay later product is a Me Too version of the product. Let's not forget the innovator in that space was Affirm. That was the innovator in the buy now, pay later. And Affirm, of course, was created by a member of the PayPal mafia. Right, Max Levchin was a member of PayPal mafia, and he went on his own to create this firm from scratch, and of course, then that leads to a company like PayPal just doing add-on, but you're just a Me Too product. You're not the innovator of a product. Same for what they introduced recently, the stable coins, the PayPal USD. Like to me, that is also a Me Too innovation. Stable coins have been around for well over 5 years from now, and especially a stable coin issued on Ethereum. That's not new. That has existed for a long time. So there's a lot of innovations that could still happen in what I call fiat fintech, and that still need to happen. But the question is, are these innovations i.e. the next wave of growth, the next stage of growth? What would get me excited about a stock and excited to buy a stock? Would that innovation come from PayPal? And the answer to that is I don't know, but I can think there's two major innovations in fintech that I see have not happened yet. So one of them is micro payments. And so micropayments on USD rails is largely non-existent, except we know that micropayments are a solution to so many issues, including spam. Like if you were to charge, say, 1 penny to send an email, you would eliminate spam. Spam would essentially be gone because scamming a lot of people would cost a fortune. Sending a lot of scam emails would cost a fortune, but the cost would be so tiny that it would not be a deterrent to anybody. So I believe there's a lot of innovations that have yet to happen in the micropayments space, in fintech, in traditional fintech, that have not happened yet. And I think this is a big deal, and this is inherently linked. This micropayment system is inherently linked to fiat fintech and to some of the projects that Elon Musk has with X.com. Like if you introduced micropayments, there's a lot of issues that could be solved. There's a lot of people that could actually make money from micropayments, because some of the value that you provide, like say for example a comment on YouTube, you may provide, half a penny of value every time someone views the comment. That may be how much money you're creating, but you can't be paid for that because micropayments do not exist. I believe that's one of the directions where innovation could happen in the space of fintech. And another one is liquidity pools. So liquidity pools, if you look at in cryptocurrency, the way trading happens is very interesting, where you pledge a pair and then you use a liquidity pool as opposed to a bid-ask system. You have a liquidity system to do trade and to exchange. That's a major innovation that I believe could happen for small business and for an international company like PayPal. But again, who knows? And innovation, the nature of innovation, you don't know what innovation is going to come next. I'm sure there's more, but I don't know what innovation is going to come next. The key to me is that PayPal right now, it's a sleeping business. It's a big business. It's a business that has a moat, but that moat is under attack. I don't think the stock is cheap enough to justify buying at that level of growth. I'd like to see it, probably 5 times cheaper than that in order to get a compelling price for those measly 8% worth of growth that they have. But they can turn it around. And I think a lot of the excitement on Twitter is about the new CEO and what the new CEO had been able to do at Intuit. Intuit has been an innovator in its field. And so maybe new innovation will come at PayPal, but growth, in my view, will come from new innovation. And long-term success of a company like PayPal can only come from their ability to perpetually offer a better product and a product that is more compelling to the competition. Because buyers on websites have choices. They can use whatever system of payment they want, and merchants themselves have choices too. Let me show you again, the competition, all of the different competition that varies. So anyways, this was not investment advice. I will not be buying PayPal, but this is not investment advice. I hope you were entertained, appreciating your likes. I appreciate your subscribes. Have a wonderful, wonderful day.